I can see silver actually going more rapidly than twice as fast on the upward direction as gold. I really do think that silver has a role to play here. And in the very, very short term, there is no doubt that this ESG rubbish is creating enormous demand for silver. There is no supply there. And on those grounds alone, it's going to drive silver a lot higher. We're looking at, I think, a potential crisis in the paper markets, which could actually take out the bullion banks.
The silver market is undergoing a unique set of dynamics with significant implications for investors and financial systems. Despite not being traditionally valued as money, silver strongly correlates with gold prices. When gold prices rise, silver prices tend to increase even faster, suggesting that silver retains some intrinsic monetary value. While gold has been making headlines with its record highs this spring, silver has outperformed gold, rising 23.9% compared to gold's 12.7% increase. Legendary investor Alasdair Macleod highlights a key issue in today's silver market: the significant shortage and squeeze in the paper market. Paper silver includes financial products like futures contracts, allowing investors to bet on silver prices without owning the metal. These markets are currently experiencing reduced liquidity, meaning fewer active traders are pushing silver prices higher. Consequently, silver could yield higher returns than gold for investors willing to handle greater risk. Alasdair observes a major transition in the silver market from paper-based trading, which relies heavily on credit and speculation, to physical trading, where actual delivery of silver is required. Historically, only a small portion of paper contracts were expected to be fulfilled with physical silver. However, this is changing as more investors and nations demand tangible metal. This trend is evident as silver flows from Western reserves to Asia, with nations like India and China stockpiling large quantities. India, the world's largest silver consumer, imported a record 4,172 metric tons from January to April, up from 455 tons in the same period last year, with nearly half from the UAE due to lower import duties. Rising demand for physical silver challenges paper markets and bullion banks. If this continues, it could lead to a crisis in the paper markets as bullion banks may struggle to meet physical silver demands, causing financial upheavals. We will present clips from Alasdair Macleod's interview with Kinesis Money, but before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you and enjoy the video.
It's a fascinating situation because silver is not priced as money at all. It's not valued as money. I mean, if it was valued as money, we'd be looking at a gold-silver ratio back in sort of, Sir Isaac Newton's levels, sort of 15 times, whatever. So it's definitely not. Yet, the thing that's fascinating is that when gold runs, silver runs twice as fast. So it does have this sort of moneyness, if you like, inside it, even though it is not priced as money. On top of that, of course, we've got, as we were talking, we've got the shortages and the squeeze in the paper market and the lack of liquidity, which is driving the price. I mean, I can see silver actually going more rapidly than twice as fast on the upward direction as gold. So, for people who can stomach a little bit of risk, and there is nothing. There's no sort of extra return without some sort of risk, then it actually could be a good way of getting to gold. Go via silver. If you can take the risk, go via silver. I would expect to see silver outpace gold, certainly until you get the silver-gold ratio down to somewhere between 30 and 50. I can't be more precise than that. At which point, I think I would probably reassess the position. I personally have quite a bit of silver for that reason. I want to get as much leverage on the gold thing without going to a bank and saying, look, here's my collateral.
Yes.
I've no longer got it. I don't want to go into that game. No, thank you. I really do think that silver has a role to play here. And in the very, very short term, there is no doubt that this ESG rubbish is creating enormous demand for silver. There is no supply there. And on those grounds alone, it's going to drive silver a lot higher. And it's going to break the markets. And this is something actually I'd be very interested in your view, Andy. I mean, what I see is after 40 odd years of paper markets, and the actors in those markets being entirely used to a situation where delivery never really takes place. And it's just credit. The whole thing is done on credit. It's a mountain of credit, which can be expanded, contracted, whatever. We're now in a situation, I think, where that credit is now being encashed for physical. This is really what it boils down to. I mean, we see the deliveries on COMEX, which is never meant to be a delivery market. We see how this stuff is being drained out of the West into Asia. So we're looking at, I think, a potential crisis in the paper markets, which could actually take out the bullion banks.
India's silver imports surged in the first 4 months of this year, totaling 4,172 metric tons, surpassing the 2023 imports of 3,625 metric tons. This spike underscores India's rising industrial demand for silver and growing investor confidence in the precious metal. An anonymous government official disclosed these figures, citing significant growth compared to the 455 tons imported during the same period last year. One of the primary factors driving this surge, as noted by Alasdair, is the Indian government's proactive promotion and potential subsidization of photovoltaic solar cell production. These cells rely heavily on silver, creating substantial demand for the metal in India. For example, Reliance Industries, a major Indian conglomerate, recently launched a facility capable of producing 5 gigawatts of photovoltaic cells, boosting demand for silver. India has sourced over 1,500 tons of silver from the COMEX to meet this demand this year alone. This significant outflow has depleted available free stocks of silver in vaults, contrasting with holdings in ETFs or by long-term investors. As the supply of readily available silver diminishes, a tight market squeeze is unfolding, presenting challenges for short sellers in paper markets. Alasdair warns that this trend could precipitate a crisis among bullion banks operating within these markets. Let's get back to the interview.
China has been controlling the price of silver for a long time, really because it needs it as an industrial metal. But India has become a major buyer, really, again, for industrial purposes, because India is ramping up its ESG credentials. The government is encouraging and I think even subsidizing the production of photovoltaic cells. And so, I mean, Reliance Industries, one of the major conglomerates in India, has recently opened a factory which produces 5 gigawatts of photovoltaic cell output. Needs a lot of silver. And so where do they go? I mean, it looks to me like they've been standing for delivery on COMEX, where, I think over 1,500 tons has come out this year. We're talking about quite serious quantities. And stocks in the vaults, free stocks as opposed to stocks which are actually sort of held by ETFs or other serious holders, as it were, long-term holders. That liquidity is actually diminishing very substantially. So there's a huge squeeze, and of course nobody on the short side in the paper markets can close their positions. I mean, it is actually, I think I can see the possibility of a crisis in the bullion banking community. I mean, not just on silver, but also gold, where they cannot close down their position. And if you look at the producers on COMEX, when we had the spike up to $1,900, was it September 2011 or 12?
Yeah, exactly.
The producers category was net short of about 200,000 contracts. This time, they're short of less than 50,000. So you can see that the burden is actually on the swaps, and they can't escape from it. They can't turn around and tell the miners and so on, look, sell your production forward so you can guarantee your cash flows, which is the old story that they do, because the miners aren't having it anymore. they're not idiots. so this is a squeeze. Yeah. Under normal circumstances, you would expect the purchasing power of paper currencies to drive the value of gold valued in those paper currencies. But we could be moving into a situation where this sort of imbalance between the Chinese demand and the supply in the rest of the world could actually force the pace, raising the value of gold, if you like. I mean, I don't like the word intrinsically, because there's no such thing as an intrinsic value, because you value something against something else. But, on its own, gold in terms of its purchasing power could increase very substantially, measured in commodities, oil, goods and services, whatever, because of this factor. In other words, it's not just the paper currencies driving towards their own demise. There is also an end coming from the gold side as well, because of this accelerating demand from the Far East.
The present scarcity and tightening in the paper-silver market may heighten volatility and drive up silver prices. With liquidity dwindling in futures and derivatives trading, silver might emerge as a more appealing investment, potentially offering superior returns compared to gold. This shift could pose challenges for financial institutions as they manage their market positions, potentially impacting market stability and investor confidence. Feel free to share your thoughts on Alasdair's prediction in the comments below. Don't forget to like this video, subscribe to the channel, and turn on post notifications for more updates. Thank you for being part of our community.